All right, welcome back. Joining us now virtually this afternoon, we have our financial expert, Nick Sapienza.
Yes, Nick, thanks for joining us. So the big question today, how can people, investors, make sense of a roaring stock market and faltering economy? It sounds a little intimidating.
Absolutely. That's a great question. I think my colleague Ben Carlson put it best in one of his blog posts when he said that if you'd shown someone a chart of the S&P in March with no other context, you would think that aliens had taken over the world and started a war. So I think it's interesting that after experiencing the fastest bear market in history and then following that up with one of the fastest recoveries on record, that it did very little to quell the concerns of investors. But then you can imagine the investor that's been impacted the most by the economic shutdown, and that's the small business owner, right? I'm thinking of restaurateurs in particular. That's what comes to mind for me. But note that there are roughly 600,000 companies in the U.S. that employ over 20 people, but less than 1% of those are actually publicly traded. And so that's why things can feel so bad, yet the stock market be doing so well. It's a smaller sample size. But the first thing to remember is that the stock market is not the economy. The economic data is backward looking, and stocks are looking forward, or seem to be looking forward to a brighter future. And so, although we've seen the highest unemployment level since the Great Depression, GDP down 30%, and historic volatility, the stock market is still roaring, reaching new all-time highs as of August 18th, I believe. So it's easy to see why people are confused and why maybe they're feeling a little cautious when entering the market. But I think rather than being fearful, you should just ask yourself one question. Where is the return coming from? And that's from big tech, or what I like to call the stay-at-home stocks. It's the FANG stocks, or FANG now. It's Facebook, Amazon, Apple, Netflix, Google, and Microsoft. These are the biggest, most important companies in the S&P. In fact, over the last 5 years, they've been accountable for over 2/3 of their S&P 500 returns. So concentrated returns are nothing new. In addition to that, if you look back to 1900, you would see that the majority of the stock market's return has come from only 4% of all publicly traded companies. But I think what's most enlightening is that if you take it a step further and look at these companies' balance sheets, you would see that they're deriving most of their revenues from overseas and in some of the wealthiest industrialized countries. So for the first time in a decade, the world's wealthiest countries are outside of the U.S. are actually doing much better than the U.S. It's Japan, South Korea, Germany, and others that not only seem to be managing the pandemic a little bit better than we are, but that's where their economies are ahead of ours in terms of their reopening.
Yeah.
So what's more surprising is that the FANG derives much more of their revenue from overseas than most other stocks that are publicly traded, and they've seen explosive growth overseas as well. So I think it's a very effective combination and helps explain a lot of the market's recent returns. And I think the most important thing for investors is that when you listen to different narratives about investing, you should ask yourself one or two questions. Does this apply to me? Am I a day trader or am I a long-term investor? I think it's just really important because there's going to be another headline that comes into the fold to derail you, just to keep the big picture in mind, not to let current events dictate your investing strategy, and just let your financial plan and your investing strategy dictate your moves in the market going forward.
All right, Nick. Well, thank you so much for joining us this afternoon.
I know you explained everything wonderfully. And if you guys at home missed something that Nick said, don't worry. We're going to put it on our website, klaf.com. But before we go to break, let's check in with Adam.